AmeriSave Mortgage Review. Rates, fees, and how it compares. AmeriSave Mortgage Corp is a national direct mortgage lender that focuses on competitive rates and an online application process. If you're shopping for a mortgage, understanding how AmeriSave stacks up against other lenders is crucial, especially given the current market. Here's a breakdown of what to expect, including loan options, fees, and the borrower profiles best suited for this lender. What is AmeriSave Mortgage? Founded in 2002, AmeriSave operates as a direct lender in most U.S. states. This means they handle underwriting internally, unlike mortgage brokers who distribute loans to third parties. In a market where mortgage originations are projected to exceed $2 trillion by 2026, shopping for the best rates is essential. AmeriSave positions itself as a rate-driven lender, often offering aggressive pricing for borrowers with strong credit. Loan options available. AmeriSave offers standard mortgage products. Conventional loans, backed by Fannie Mae and Freddie Mac, these require good credit and stable income. Current 30-year fixed rates are above 6%, a significant shift from pandemic-era lows. FHA loans, down payments as low as 3.5% make these attractive for first-time buyers. FHA loans account for about 15% of home purchase mortgages nationally. VA loans, available to eligible veterans, guaranteed by the Department of Veterans Affairs. Demand remains high, with millions of VA loans issued in recent years. Refinance loans, both rate-and-term and cash-out refinance options are offered. Refinance activity is highly sensitive to interest rate changes. How AmeriSave mortgage rates compare. Mortgage rates depend on several factors: credit score, down payment, loan amount, debt-to-income ratio, and broader market conditions. The Federal Reserve's interest rate policy directly impacts mortgage costs. AmeriSave advertises rates online, but final pricing depends on borrower details. Unlike some lenders with no origination fee promises, AmeriSave may charge upfront processing or origination costs, affecting the APR and total closing expenses. Crucially, always compare APRs, which include fees, rather than just interest rates. The Consumer Financial Protection Bureau recommends this to ensure an accurate cost comparison. The application process. AmeriSave's process is primarily digital. Submit an online application, review rate options, upload documentation, underwriting review, closing coordination. Given that 88% of homebuyers finance their purchases, speed is essential, particularly in competitive markets. Confirm rate lock terms before proceeding, as these can expire. Who is AmeriSave best for? Rate-focused borrower. Those with a 740-plus credit score comparing multiple lenders might find AmeriSave's advertised rates competitive. First-time buyer, FHA, competitive pricing is possible, but upfront fees should be scrutinized. Digital-savvy shopper, borrowers comfortable with a fully online process. AmeriSave versus traditional banks, and online lenders. Traditional banks often offer relationship-based discounts and in-person support. AmeriSave competes through online advertising and a streamlined digital experience. Other online lenders offer similar convenience, but fee structures and rate lock policies vary, so direct comparisons are critical. Legitimacy and safety. AmeriSave Mortgage Corp is a licensed national lender operating under regulatory oversight. You can review complaint data through the Consumer Financial Protection Bureau to assess its track record. Pros and cons. Pros: competitive advertised rates, digital application process, wide range of loan options, direct lending model. Cons: potential upfront processing, origination, fees, limited in-person support, rate transparency, may vary after documentation review. Final take: is AmeriSave worth it? AmeriSave can be a strong option for borrowers prioritizing rate shopping and comfortable with an online experience. Strong credit applicants comparing multiple loans may find attractive pricing. However, carefully review upfront fees and rate lock terms. Borrowers who prefer personalized guidance might be better served by a traditional lender. Before deciding, compare current rates and request at least 3 loan estimates. Evaluating APR, fees, and terms will help ensure the lender aligns with your financial goals. Data accurate as of March 3, 2026, and subject to change.